Hey everybody, this is MJ with MJ Trades. Just want to come to you tonight with my first video in the new room. First, I just want to say I appreciate the support. You guys coming in the room, checking it out. This is going to be my analysis on the S&P 500. So everybody knows what happened last week with the correction. 9% move off the bottom from 323 to 296. That's a big correction. We saw plenty of opportunity out of that correction. Anytime we correct 9 to 10% in the bull market, higher highs and higher lows, we're going to be bound for some good buying opportunities. So let's talk about the move that it made off the bottom. Notice how I've got the range set out. The range is upward trending. The 324 high is at the very top of the range. Comes down 296, bumps right off the range, almost makes it down to the 50-day moving average. 200-day held, didn't hold support too well, but it came right down to the bottom of the range. Bounced off the range there. Then it made a 6% move from 296 to 315. That's a big move. I don't understand why somebody would think that after a gap up into the gap from 323, we gap up 6% off of retail numbers being stronger than expected. Why anybody would think that that was going to be anything but bullish. It made a nice retracement off the move, closed the gap, bounced perfectly off the gap, essentially off the 20-day moving average, the blue line, formed a bullish hammer candle, and then continued retracement, forming this bullish wedge and a bull flag at the same time. So we're looking for a move to break through that wedge. Do I think we hit 320 tomorrow? Am I going to say no? I really don't know. I mean, bulls could come out. We might get a little bit of a short squeeze. People might have thought that might have been a dead cat bounce, that 6% move from the bottom. I think we had plenty of confirmation with the hammer candle holding support and old resistance, and pretty much bouncing right off the 20-day moving average, staying in the upper part of the range. This pullback was just nothing but a retracement and consolidation. We could see tomorrow being flat to slightly up, maybe with a little gap up on Monday. That's what I would think. We might see a small gap up. Remember, options expiration tomorrow, so we may not have too big of a move. We may see some more consolidation, maybe a sideways move, maybe slightly up, maybe slightly down. I think we don't want to see the RSI get overheated too fast if we want to make sure we extend this bull rally. I know some of you may have calls that expire tomorrow or next Friday, and you need this thing to run. But guys, we need to make sure that we are positioning ourselves well where we have a little bit of time. I know you want that 50% move or that 100% move in a day or two. Well, guess what, guys? You can get the exact same move in stocks right now with the expiration date of July 17th or further. Still find some good deals out there on stocks that are moving good, and capture some security and limit your downside risk while putting yourself in position to profit handsomely. That's why I like to swing trade, because it offers me an ability to kind of not be worried about the micro movements inside the market. I want to make sure that I have enough cushion to not worry about if it's a down day, or did we just fall $2. Now my options trade's garbage and the theta burn's going to kill me. So I need this thing to bounce and run real quick, and if you don't get that gap up, it's probably not going to happen. So why don't you, my personal strategy is to kind of play a little further out, give myself a little more room, and not have so much risk and so much anxiety on watching every single movement of the markets. That gets draining for me day to day, just sitting there glued to my screen watching a chart, wondering which way it's going to go, and should I sell or should I buy more, or what's going on. So it's a psychological game trading stocks. Right now we're in a pretty easy market. We want to see market conditions improve to where we were in February, and I think they're heading that way. I think of 2021, 2022, America should be fine moving forward. So people are still seeing these prices at a discount. It's when we get back up to all-time high levels. Now, are we in a real bull market, or are we just in a bear market rally? We'll see if we can break through the all-time highs. I think we run up this time to the top of the channel, just like we did previously from the 275 move. You see the big bar, you see the big green candle right above the 50-day. The 275 move up that pretty much shot us out of a cannon. I know some people thought that gap, the 223 gap to the 312 gap, 311 gap, that was going to be an island top at the top of that wedge. It still could be. We need to close that gap out for sure so we can eliminate that island top, because that island top could be a bearish reversal. So you do need to be aware of that. I really think that we break through this wedge. Hopefully tomorrow. That'd be great if we if we have some more consolidation. That's just because the chart wants to continue to revert back to the mean. It hasn't quite. Today's candle didn't quite get to the 20-day moving average. It closed, or it bottomed out just a little bit above it. So if we see a little downside movement to touch the 20-day moving average, I wouldn't be surprised to see a consolidation day tomorrow. But I also wouldn't be surprised to see an update too, to try to work some of its way up in through that wedge. So I think we're going higher in this market. I think the RSI is great. You've got a lot of room to run. When we pulled back last week, we were sitting around 77 in the RSI. That's a perfect short right there. When we start hitting 70, 72, 74, 75, you want to start nibbling on some puts right there. But I'm long in this market right now, and once the indicators tell me that we're due a correction, then I'll change my strategy. I'll start lining up my call positions, and I'll start playing the downside a little heavier. I may sell calls, I may buy puts. So right now I'm all calls, no puts. I have a mental stop loss locked in. Do I think we're going to hit stop losses? I don't think so, but we'll see. Be prepared. You never know, a downturn. And don't choke your positions to death. In options trading, if it starts turning against you, you can wind up 25% down pretty easily. If you're convicted that you think that this stock is going to go higher, that stock is going to go higher, then you need to be able to scale into your trade and buy a little bit more. I know with the JP Morgan alert yesterday that I gave out that I thought it was going to be a favorable trade. I do think it's going to be a favorable trade, but I think I was a day early. I didn't expect the 100 break. The 98 bounced off hard, and we closed near 100, so worked out it's going to work out great, I think. I'm going to do a chart on all four of my open positions. I have open positions in DraftKings. I have open positions in Facebook, JP Morgan, and Snap right now, all calls. So this is my first video. I hope you guys enjoy it. If you can, give me some feedback. Thank you guys very much.